In this video, we are going to look at why the stock markets could be about to crash in the next couple weeks or the next couple months, and potentially what the effect of that could be if it happens on Bitcoin and the crypto markets. So let's dive straight into it. By the way, if you are new to the channel, make sure to subscribe, hit the notification bell, smash the like button if you do enjoy this content. And if you want more updates from me, you can get on my email list. It's the first link in the description down below. And you can follow me on Twitter and Instagram. The links are also in the description below this video. Okay, so what we have here is a chart of the S&P 500. It is the index on a weekly chart and just a normal scale. But the reason why I'm sharing this with you now is because we've had something happen now with the weekly close that usually has led to more downside, as well as some other things that I do want to point out, which could potentially lead to it. Now, of course, I will preface this with, as you probably know, the stock market has been going up since 2008 or 2009. So anyone who's been calling for tops every single time has been wrong over the last pretty much 14 years, which is pretty nuts. Okay, it's the largest bull run ever, which is mostly due to the easy monetary policy, the excess money printing, and it's just being bought up by central banks. If you look at the assets balance sheets of the central banks, that's just been going up in the same way with the stock market. Obviously, we have inflation. There's a whole lot of other factors. I mean, this is a crypto channel. I don't really focus specifically on stocks, but there is a very real correlation lately between Bitcoin and the stock market. And obviously altcoins follow Bitcoin, and because of the influx of institution into Bitcoin, I guess that correlation is there. So it is going to be important to pay attention to what the stock market does, because if the stock market does sell off and we do indeed get some sort of major crash or extended bear market, which we haven't seen since 2008, then it's possible that there is further downside initially in the crypto markets. And then maybe there will be some sort of decoupling afterwards where Bitcoin becomes a store of value or a safe haven and goes up even while the stock markets are going down. But we'll talk about that later. So what's important to note over here is that we have just had a weekly close below the 50-week moving average on the S&P 500. And you can see that hasn't happened until March of 2020, which was obviously the health crisis sell-off, a huge sell-off where the market dropped. You can see over here it dropped almost 35%. Right, so far what we've had here is we've had a drop of maximum about 11%. So if it does end up going back to the 200-week moving average, which is about a 30% decline, well, then there's some more red lying ahead of us, not just for the S&P 500, but most likely for a lot of the markets. And you can see this is some sort of pretty reliable indicator that when you get a weekly close, once again below the 50-week moving average, I've shown this also on Bitcoin, same thing applies. When it gets a weekly close below it, it tends to go lower, and usually the next stop can be the 200-week moving average. You can see that's exactly what happened over here, March 2020. Here, same thing. It got a weekly close below, and even though it took several weeks of sideways trading below that 50-week moving average, eventually it did end up with a sell-off in 2018 back to the 200-week moving average, which had support, right? All these times, the 50-week moving average has held the little wicks here, but you can see it's bounced, and then when it goes through, it goes down to the 200, and bounce, through to the 200. Even here, right, weekly close, it went up a little bit above it, but back down to the 200. So basically, from all the way down here, it has dropped all the way back to the 200 every single time it's done that. Now, is that going to do it this time 100% guaranteed? Nobody knows, right? There's no 100% guarantees. But if you're looking at the odds and the probabilities of what happens when you get a weekly close below the 50-week moving average, well, I'd say the chance is pretty high that we end up going lower. And this time, the distance to the 200-week moving average between the 50 and the 200 is the largest it's been. You can see over here the distance was pretty small. Over here we've got a big distance because we had a big run up after March 2020. So maybe there is a correction coming. And you can basically see we had a bit of a retest here where we broke down below it, tried to go up, and so far now we have had the weekly close below. This one was, while it went below, it was just a wick, it still closed above. Now we officially have the first weekly close below that 50-week moving average. So based on the previous times this has happened, well, basically that is a warning sign. Then some other things that we need to look at too is that in 2021, a record number of CEOs sold huge amounts of their own stock. So you can see over here, company insiders go on stock selling spree in 2021. You can see 48 top execs have collected more than $200 million each from stock sales in 2021, almost 4 times the average insider numbers from 2016 to 2020. Execs across the S&P 500 sold 63.5 billion in shares through November, up 50%, right? So you would imagine that they're not doing this for no reason. It's obviously in their interest to continue to make as much money from their shares as possible. Now the market has gone up an extravagant amount. You would assume that the CEOs and directors of these major companies have access to the top financial analysts and the data and everything like that. So the fact that they're doing all of this in 2021 is interesting. You can see over here, Mark Zuckerberg sold shares of the company formerly known as Facebook for $4.6 billion last year, right? Then we have Michael Dell. You can see he converted 2.99 million super voting Class A shares for a total of almost $300 million. And then we look at there's many executives. For example, Elon Musk exercises options and sells more Tesla stock. I've overlaid this on the Tesla chart. Look where he ended up selling that, almost exactly at the top of the market. Then we have over here the Microsoft CEO Satya Nadella sells more than $285 million in Microsoft stock. And if you overlay the tweet, when that was done, you can see almost exactly perfectly at the top of the market. So what is really going on there? Also keep in mind that if we zoom out here, we had a crash in 2000, right? We had a crash in 2008, late 2007, but basically 2008. So 2001, 2008, 2015, nothing really happened. You can see over here, it just kind of went sideways. Now we are another 7 years later in 2022, right? So 1, 2, we skipped this one. Could it be that 2022 is going to be another large sell-off like we saw in 2001 and 2008? That is the question. You add in the 50-week moving average that we now had a close below, the record selling of stocks last year in 2021, and specifically very close to the actual top of the market so far. You never know, this could reverse and continue going higher one more time, but all of that adding up is a number of red flags or warning signals that we have to consider that potentially there is going to be much more downside in the stock market this year. And if that happens, what is going to happen to crypto? So again, there's no guarantees. I can't see the future for sure. Who knows, maybe we get a little bit of a sell-off and we recover quickly, as has been the tendency over the last many years, over the last decade. Every time we get a sell-off, we end up recovering very quickly and end up going higher. And then another large sell-off, and then we end up going higher. So maybe we'll have another sell-off and we have a quick recovery and end up going higher, okay? It's not necessary that we go into an extended bear market. Could be possible, could not. We'll have to wait and see. But this is what the charts and the data is telling us, that there is potential for further downside and a further sell-off. Now, real quick, if we look at Bitcoin, what has happened here so far is, again, the same thing. With the 50-week moving average, this is a weekly chart. I've shown you this before over the last couple of months. When we go below the 50-week moving average and we get a weekly close below it, the chances of further downside are pretty high. It's only happened 4 times over the last, say, 7 or 8 years. And, it went down. It's often more than 50% from that moment until we reach the 200-week moving average. Same thing. Okay, so we've had this weekly close below the 200-week moving average, and we hit $33,000. So it didn't quite test or sweep the May 2021 lows. Maybe it was front run. Okay, a lot of people were expecting that, including myself. I'm still expecting that, and we got this bounce. But you can see so far, this bounce has failed. And if you draw some trend lines over here, you can see this failed at exactly a retest of this diagonal line, which has been the trend for the bull run for the last 1.5 years. Now we retested that and we pulled back down, and so far we've still got 2 days left before this week closes. So if this week maybe for some reason continuously shoots up and goes back to 44 or 45,000, maybe there's some chance of further upside. But how this is looking now with 2 weekly rejections from that level, it does look like we might want to roll over and still continue the downside, and maybe still continue to that 200-week moving average, because you can see the 50-week moving average. I made a video about this too in 2018. Once we broke below it, we retested it from the bottom, got rejected, and continued all the way down to the 200 moving average. So we broke below it, we retested it. There's a small difference, but if the market rolls over, this moving average is going to come down, and it might actually touch the exact top over here. So this might actually ended up being a retest of the 50-week moving average, a bearish retest, if this rolls over here. And obviously we have support around this, say 28 to 33,000. That's a level. But if it breaks below there, well, then I think the next stop is the 200-week moving average, which, looking at history, is what has happened a lot of the time. When the price breaks below the 50-week moving average, the next stop tends to be the 200-week moving average. So could this reverse and could still go up? Yes, but right now there's a lot of overhead resistance. You can see also these lows were the exact resistance. You have this diagonal resistance. So basically this whole area over here between, say, 52 and 45 is major overhead resistance, I think. So unless we get above this area, unless we get back above, say, $52,000 or $53,000 for Bitcoin, I think the bias is still bearish, and I think there's still potential to go lower, retest the May lows maybe, but potentially even go back to the 200-week moving average. It will depend a little bit on the stock market too. Okay, so as I've shown you, if the stock market does end up selling off another 10 or 20%, like we saw in March in 2020, then it's very likely that the crypto market is going to go down with it initially, because of the correlation between Bitcoin and the stock market that seems to be pretty evident lately, and because altcoins are tied to Bitcoin. So there is still potential for going lower. I don't want to get overly bearish. I'm just sharing what I see on the charts and what the possibilities are. Once we start flipping bullish, once we start getting back above the 50-week moving average, once we get back above $52,000 or $53,000, and it looks like the bullish trend is there, like the bottom is in, I will be among the first to start sharing that I think we are back in a bullish market. But until then, we have to follow what the trend is saying. And in this case, patience can be very, very important and very profitable, because if you think that the bull market is back before it is actually back, and you start buying while it still drops another 30, 40, 50%, or maybe even more, well, then obviously you're going to get huge drawdowns. It's going to affect you emotionally, because it sucks holding a negative position for many months or a year or longer. And the worst thing is, if you buy too soon, then you've basically used up your risk fiat to be able to buy the lows that will ultimately come, right? So in 2018, if you were buying every dip and you were buying too early, by the time we got the ultimate dip at the 200-week moving average, if you bought all those dips before, well, you wouldn't have much risk capital left, and you would probably be in a pretty bad space mentally or psychologically for holding a negative position and seeing your position in the red for so many months until that happens. So sometimes it is a good idea just to be patient. I know we'd all like the market to go up. At some point, the market will go up again, and probably in a big way, because I still believe Bitcoin and digital assets are here to stay. They're going to get much, much bigger. But in the short term, the market could still go lower. And what that means is, if you are patient and if you are prepared for that capitulation, if it comes, there's no guarantee it will, but if it does and you're prepared for it and you can capture those lows or near those ultimate lows, the upside that comes after that is phenomenal. I mean, we saw that even with Bitcoin. Okay, Bitcoin did more than a 20x from those ultimate lows. That is huge just for buying and holding Bitcoin. Ethereum did almost a 60x. Okay, so $10,000 into Ethereum at those lows could have turned into $600,000 at the highs less than 2 years later. So while maybe short term it's not pleasant if the markets go down, For those who are prepared and patient, managing risk properly, have risk capital available, it is going to be the most amazing opportunity for the next few years. And that is really where the wealth is made. That is where you can capture those insane gains by being patient and by buying the lows when everyone else capitulates and has no money to buy them. If you can buy it then and be patient and hold for another 2-3 years after that, the amount of money that is possible to be made is potentially huge, like life-changing retirement type money from small amounts invested, or relatively small, you know, 10, 20, $30,000 can turn into more than $1 million. Okay, it is possible in these crypto markets because we are still young in the space and it can grow much, much bigger over the coming years. But patience is key. So for now, let's continue to be patient. Let's see what the markets continue to tell us. When we get bullish confirmation signals breaking back above the 50-week moving average, for example, and getting back above, say, 52 or 53,000 with a weekly close, I think that's going to be a good bullish signal. Until then, we have to continue to be careful that this isn't just continuing to roll over the next few weeks or next few months, and that it is ultimately heading down to the 200-week moving average before finding a bottom and really starting the next bull run. As always, I will continue to update you here on YouTube. Make sure to subscribe to my email list so you do get updates when I send them out. It's completely free. First link in the description down below. And you're welcome to follow me on Twitter and Instagram also for daily posts and updates and content and all that kind of stuff. The links are in the description down below. So have an awesome day and I will see you in the next video.